Hey everybody, Micah Maupin here with Trio Realtors, your Cincinnati real estate agent. I'm here with Dan. He's here from NRL Mortgage, and he's going to explain to us a little bit about NRL Mortgage and also some of the documents that you need at the beginning of the buyer's process. So Dan, how's it going?
Going good. Thanks for having me.
Yeah, no problem. So tell us a little bit about NRL.
So NRL Mortgage, we've been here about 8 years now. Most people in general haven't heard of us just because unlike most retail banks, we only do mortgages.
Okay.
So we don't have people coming in opening checkings accounts, or we don't do auto loans, so we don't have all that advertisement that most retail banks have. But based off volume, in the whole tri-state area, there's over 250 mortgage companies, and based off volume, we're actually ranked number 10.
Okay.
So
all right, good.
Yeah, so it's something we're really proud of, and the reason we can do all that volume and really not have that name recognition, just because we have a couple things that really make us unique. We can close loans extremely quick.
Okay. What's extremely quick?
So most banks nowadays, after TRID, they close in about 30 or 45 business days.
Okay.
We can close in literally 10 business days, even with TRID.
Okay.
So lightning quick compared
that's pretty fast.
Compared to the industry average. Also, we have in-house underwriting. Mm-hmm. So literally our underwriter is right 2 doors down, that I have access to and can ask her questions, so we can get a lot of things resolved really quickly.
Okay. Well, where do most underwriters work?
Yeah. So most banks, they'll have the loan officer you go up to, go into the bank, but then they will send all your information to usually almost like a warehouse of underwriters, usually in a different state somewhere.
Okay.
And you don't have that connection with the underwriter, just basically just a person that you never meet, but we actually know our underwriter and have access to her and can go talk to her and ask her questions and get her advice on a lot of things, which we can get around a lot of obstacles really quickly.
Yeah, that helps speed up the process because you're able to, instead of having to call them and they not answer, you leave a voicemail or send an email and wait 1 or 2 days to get something back.
Right.
You can just walk down the hall and say, what's going on?
Right. and when you use the same underwriter every single time, you know what she expects and you know what to get every single time. Mm-hmm. You have that consistency that allows us to close those loans so quick.
Okay. All right. Cool. What type of documents do the buyers need to get started to looking for a house?
Mm-hmm. So usually the first contact I have with any first time home buyer or buyer is the pre-approval process. That I only usually do over the phone. I just need to know how much income they've made in the last 2 years. Mm-hmm. Usually they're adjusted gross income on your tax returns.
Okay.
And then I will go ahead and pull a credit report. And from that credit report, I will be able to see all their liabilities. So any basically their payments on their cars, their other homes, their credit cards, their student loans.
Okay.
And then once I have those 2 pieces of information, I can use that to calculate their debt to income ratio.
Okay.
And then usually I will ask how much money they're comfortable putting down, or we have programs where you need to put 0 down, and others that require 5% down.
Yeah.
And then with just that basic information, I can typically pre-approve someone. Mm-hmm. And then afterwards, once they have the pre-approval, they find the house, they get a purchase contract. Then we could get into the actual documents. I typically meet with all my clients face to face and just make sure I get everything I need usually at their house, and so I can gather up all the information, and then it just makes the whole process go a little smoother.
Yeah, I would assume it'd be a lot easier to go to somebody's house in case they forget something.
Right.
Then they don't have to drive all the way back and then go find it in some buried closet somewhere.
Right, and usually I'm there, helping them find it. So, which I don't mind at all. It just makes everyone's life a lot easier if we can just get everything up front and just move from there.
Yeah, definitely. All right, so then you we're talking about debt to income ratios
Mhm.
before. What exactly is a debt to income ratio?
Yep. So your debt to income ratio is two factors. So the first factor would be all your liabilities on your credit report. So
Mhm.
the minimum payments on your credit cards, your auto loan, and your homes and education loans.
Okay.
That is we basically I'll add all those up and then divide it by your monthly income.
Okay.
And then
Your monthly gross income?
yes,
Okay.
gross income, and that will give you your debt to income ratio
All
as
right.
a percentage.
All right. And people want to stay around under 57, right?
Yep. So with FHA, you typically the max debt to income ratio is 57%. There are some circumstances that allow it to go higher, but just as a basic rule of thumb, 57% for FHA, and conventional basic rule of thumb, 43% debt to income ratio.
Okay. Okay. Great. And well, that's pretty much it, right? I mean, that's all they really need.
Yeah.
It seems a lot easier than what people think.
Yeah, especially so once you do get the purchase contract, so if the next step of the process, really when I start taking over, just the list of documents I usually give all the clients. So I need the last 2 years tax returns,
Okay.
last 2 years W-2s.
Mm-hmm.
If you're not W-2'd, 1099s or your Social Security awards letters or your pension letters, all last
Okay.
2 years of those. And with the pensional letters, also need a letters of continuance showing the pension's going to continue. Typically it's for life, but
Mm-hmm. Yeah.
you know.
All right. So pensions and Social Security is obviously for retirees.
Right. So after tax returns and W-2s, I'll need 1 month of your most current pay stubs, then 2 months of your most current bank statements, and every page of the bank statement, even if the last page is blank, typically still need that.
Mm-hmm.
Also your driver's license, and then any information you have on the last any jobs you worked at the last 2 years.
Okay.
So, your employer, the dates, and, the contact information, because we'll need to verify your employment history, as well as any addresses you've lived at in the last 2 years.
Mm-hmm. Okay. All right. Now you said you have a few programs that require 0 down. You have some programs that require 5% down. Could you explain a few of those for us while we're here?
Yeah, well, just the minimum down payment for a VA is they do 100% financing. FHA 97.5%, so 3.5% down.
Mm-hmm.
Conventional, we can even do 3% down minimum.
Okay.
However, we have a lot of grant programs that can cover up to 3% to even 5% of that. So even if you get a conventional or FHA, there's a chance that you may not have to bring any money with some of these new grant programs.
Nice. No, yeah, it's if they qualify for those grants, right? Yeah, because I know there's some of them like USDA I think is 0 down, but it has to be in a specific area. It can't be most likely rural areas. So
Exactly.
On their website you can see a whole map that's dedicated to where those houses are. You just type it in. If you see one, if it falls under the USDA guidelines, then you can use a USDA loan. Now, if somebody takes a conventional loan or some other type of loan, I know some of them, if they don't put 20% down or more, they get PMI, right?
Yeah, so any time where you don't put 20% down, you have a conventional loan, there has to be some sort of mortgage insurance.
Mm-hmm.
There's several different ways you can go about doing it. You can pay it up front, which is it would just be either added to your down payment amount, and it really depends on your credit score and how much you're putting down initially. But it really just depends on a lot of different factors. The other option is you can do it monthly, and just depending if you have the down payment and you want to just get rid of it and have a low mortgage payment, you do it up front. If you really don't have that much money to put down, you'll do monthly. But the thing is with the monthly, unlike FHA, which doesn't fall off for 11 years, your conventional mortgage insurance will fall off when your loan to value is at 78%.
I mean, I'll always suggest to shop around if you guys go to PNC or US Bank or whatever those other big banks, and you're not quite happy with the loan, or they don't provide you with a pre-approval, you can always keep shopping around, and you'll find somebody. NRL is extremely good at pre-qualifying people and closing loans fast. So give them a call, talk to them, see what they can do for you. Anything else that you want to add before we head on out?
Yeah. So just one, last bit of advice. I would definitely recommend anyone, even if they think they're looking or think they might be wanting to purchase a house, in the near future, just go to your loan officer and see where you stand. Because a lot of times I've seen a lot of surprises on people's credit reports that they have absolutely no idea, collections or just whatever, a lot of mistakes. So, if you catch it early, especially I've had a lot of experience with doing credit repair. If you catch the mistake early, and I can usually get that removed and bump up your score to, and it always helps to have a better credit score. It helps you get a better loan. So
Right.
you might as well, look into it early, catch it early, and then kind of increase your score, before you find the house you're looking to buy.
Okay, all right, great. So Dan's information is here at the bottom. If you guys have any questions, feel free to give him a call. Again, give me a call if you guys have any questions. You can text, email, Facebook, Twitter, whatever. So give me a call, and we'll talk to you soon, and happy hunting. See ya.